Today is Tuesday, November the 26th, and what we look at in the Dow is tremendous volume. Look at this. I don't think in the time we've been doing these videos, we've seen Dow volume this high. That's really high. Now, Home Depot had a lot to do with it, and I traded Home Depot today, and I'm going to talk to you about the Home Depot trade in a second. NASDAQ volume, really high. And look at the top, came around 12:30 in the afternoon, around lunchtime. Came down, but then came up again. The S&P 500, same thing. But if you draw a trend line through this, you see we are steady up all day long. But look at the volume. The volume is about 140% of normal volume on a moving average. The advancers to decliners, 50 to 40%. Not very much of a breadth difference, but this is an up-to-date chart. And it shows that we didn't move. We just moved a slight amount. So that's insignificant. It really doesn't show that the money is moving in or out of the market. It just seems to be stagnant. Let's look at the S&P 500. 3140 up 0.25%, up a little bit. We need to draw a Fibonacci on that. We've got one here that was looking at a pullback Fibonacci, but we're no longer looking at this now. Now we're looking at a Fibonacci that is an extension Fibonacci. So we take this high right here and bring it down to this low, and now we're looking at what the possible extension targets can be, and we see 3288. And so, since we've broken out of this bull flag, we've got to be thinking that we're heading up to 3288, which is really a stretch to think about being that high given where we've come from. We're going to look at some other stocks. Apple down $1.65, but really not a lot to worry about because we've always got the resistance of this 138.2%. So we can expect a lot of chatter as it comes into 138.2%. It's not going to come up there easily. There's always going to be sellers right at this point or lower trying to take advantage of any of the gains and trying to push the price down. But I'm still net positive on Apple, and I have short puts, but I'm only half a position, and I have short puts 31 days out of the December 19th 255. That means that I'm willing to buy the stock at 255, which is right down here, which, interestingly enough, is a point of support. So I'm going to put a little mark right there, and I'm going to put that green line there and say that's the point at which I'm willing to buy the stock. And if we do trend downwards, we are going to hit the cloud on December 24th at the price that I want to buy the stock. So I'm really not too worried about it. I think it's a good investment, and if there's any pullback, then I'm willing to double the position that I have and get into what I would call a full position. Now Caterpillar is only down 22 cents today, but look at the volume. Insignificant. Caterpillar has no significant volume since November the 5th. So there's really no institutional players that are playing in Caterpillar. It's just the retail traders, the algorithms. I wouldn't worry about it. GDX up a little bit today, but we've stopped looking at KL because KL was down today. That's a weekly chart. Let's look at a daily. It was down today, although it was up off of its bottom. That would signal a turnaround in KL, but nonetheless, Kimberley Mines, the Canadian stock, had a negative almost 1%, whereas the overall miners were up 2.2%. So that's significant, telling you that the market really isn't as enthusiastic about Kimberley as they were when we entered the stock. T up at the top of its range. That's a bullish move. But the one I want to highlight today is Home Depot. And that's the stock that I took a position in today. And what I did is I didn't buy the stock. My God, it's $221. I'm not going to be buying 100 shares of that at $221,000. I would rather take a call position and do a vertical spread. And what I did today is I purchased the 220 calls and sold the 230 calls. I did 5 of those. Then later on in the afternoon, after I made several $100s on that, I bought the 222.5 and sold the 232.5. I posted on Twitter what my maximum loss and maximum gain would be, and the ratio is like a factor of 5. So it's 5 to 1 in my favor of making money on this trade. And so far today I've made $442, and that is with buying the 220s and the 230s, the 222s and the 232s as a vertical. So I'm going to keep following Home Depot, but the reason I'm excited about it is because of what I read about Goldman Sachs recommending that Home Depot was possibly oversold. Now, why would they be oversold? Well, let's take a look at this Fibonacci back from May 2009 all the way to this high of October 2019. If we look at a weekly chart, we had a pullback to this level here, which really wasn't a significant number. But if we take this and say this is a down wave and create a Fibonacci on that one, we find some similarities. And what we find is that there are similarities all over the place, which are going to be points that attract price. But I still believe that there's a possibility of this stock outperforming and moving up to 257.07. Look at the volume. The volume tells you a lot here. This was tremendous selling volume last week. Have we ever seen volume that high before? Yes. We saw that volume back in November of 2018. We continued to pull back, but that was when we started a big move up to the current wave. So the last time we saw this kind of negative volume was about a week and a half before we saw a turnaround. Now, are you willing to wait a week and a half? Let's look at the daily chart. And we can look at this tremendous selling volume that we had yesterday, or not yesterday, that was November the 18th, followed by less volume on the 20th, less volume on the subsequent days, and then we've had now 2 days of up volume. If we look at the last time we had big negative volume was December 2018, and look what happened. We had that big selling. That's called capitulation. And what happened is when this many people are selling, that's a signal that there's blood in the water and people are looking to buy. And what happened is the stock turned around because there were so many people selling, there became an opportunity to buy. And that wave has taken us right up to where we are today. And now we've got that selling happening again. So that's why I did 2 stages of long call, short call verticals of December 20th, 220 and 230s. And then later on in the afternoon, I did 222.5 and 232.5. Let me just point out what that means. Now, Home Depot cost $221. To buy 100 shares will cost you $221,000. I now have a delta overall position of 342. So I have the equivalent of 342 shares. But I'm doing it on a defined risk as well as a defined gain. So let me show you what that means. Let me go into the analyze statement on thinkorswim. Let's see if I can pop this out for you, detach. So here is my trade, the two trades that I did on thinkorswim on Caterpillar. So my maximum loss is $3,200. That's defined. I can't lose more than $3,200, but I can make as much as $11,785. That's the advantage of selling call verticals out in the future. You sell them out of the money, so the calls are not quite in the money. So the price was $218, I bought at $220. When the price was $220, I bought at $222.5. But I sold at $10 further out, which lowered my cost for that overall vertical. So if you just buy the call, you'll pay one price, but if you buy the call vertical, you'll pay less for it. And that means you think the stock has the ability to extend beyond your call price, but will max out at the price that you sold the calls for in the vertical. And that's what I did. Amazon up $20 today, broke through the cloud, but more important, we've been following the Ichimoku, and look at this. This is quite significant. The Ichimoku has broken through all of these resistance moving averages. This is powerful. So now we look at Amazon going to 1804, and once it gets beyond 1800, now start to look for 1816, and there's also the possibility of the flat cloud acting as a magnet pulling down, but nonetheless, Amazon is on a bit of a tear here. Volume hasn't been following the price. It's been declining. So there's still a reason to wait and to pull back and look for resistance for the Chiku span at anywhere from 1800 to 1813, because as the time moves along, the Chiku span resistance is going to get higher. But once we break into that, we break into the cloud, and the price is above the cloud, it's a good time to put on a defined risk with a call vertical. US Bank up 10%. It's just been a great stock. I know I haven't been following it with you, but I hold it in an IRA account, and I just think it's a great dividend stock to be accumulating. So that's all for today. What are we looking at for the SPX? We're certainly looking at a breakout now from this flag, and we are looking at the McClellan oscillator being essentially flat. So it's a bit of a toss-up with the obvious preference to a little bit of the upside.